Looking at starting off with the precious metals here and looking at what's going on there. We've had an incredible day here from falling out of our previous highs, but there's some really interesting numbers that are happening here as we're coming out of the daily doldrums. First of all, the silver chart has basically just pulled back into an extension long level from the previous highs in 1980 to our highs. And, those were pullbacks in themselves. And some of the other interesting numbers that we have from those previous highs, 121, 785 to our most recent low, which was right around $80.80. That is a 33.7% decline, 33% decline from the previous highs. What's also fascinating is that Shanghai is closed right now. Their closing price was $109.31, and the current price that we're trading, kind of an interesting number. There's a 34.65% premium. So the price in China is 34% higher than it is right now inside of this pullback, which is absolutely amazing. When we had premiums that were in, this is a premium chart here. The highest premiums that we've ever recorded were going into this morning, and then into Shanghai's Asia's close. These premiums have, as we were coming into January, they were only $6, and then $8. And why this is going to be interesting is because the March contract, we have about 60 days or 8 weeks left inside of the March contract. And this volume day that we had on Monday, remember Monday was a high volume day. We don't have the volume at the end of the day yet today. Of course, the day is not over. But this 360,000 contracts, we came to the calculation that it was 1.8 billion ounces of silver that traded on Monday. And it's Friday, and we're going to blow out of that number. This was the equivalent of 2 years of the entire annual supply, mining production of the entire world exchanged hands on Monday. And we're gonna blow that out. It's gonna be 2+ billion, maybe 3 billion, 3 billion something. We're going to be in the 3 and 4 years of volume traded inside of the silver contract. Why is that important? Because there is a shift from the west to the east, and the bigger that premium gets, think about what a 34, or excuse me, what was the number that we were just looking at here? $28. What is a $28.40 times 5,000? Because there's 5,000 ounces in a contract. That's $142,000 in profit per contract. Per contract. Okay. Just in one day of the January contract, when it was coming into the week before expiry, there were 1,600 contracts. There were 1,600 contracts that stood for delivery. Now, it's very rare for even 1% to stand for delivery before the end of 2025. But let's just say that 1% stand for delivery here in the March. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.